Not only was that down payment that you made for your car unlawful pursuant under Regulation Z, but it was also a tax violation. In this video, I'm going to explain how and why that down payment was illegal. But first, I am not a lawyer, nor am I an attorney, but I am that girl when it comes to consumer law. In understanding how a down payment is a violation of Regulation Z, it's important that you understand the type of transaction that you've established. If you have a finance charge, this is for you. If you have a lease, this is not for you because we are in Regulation Z. Leases are going to be a part of Regulation M, which is in the Consumer Leasing Act. But if you finance your car, then typically you are in a consumer credit transaction. Consumer credit transactions have three parties: you, the consumer, the dealership, the creditor, and the financial institution, the subcontractor. Those are all the terms that we and they are referred to within Regulation Z. Now understand this part. Two signatures create an agreement. That was your bill of sale. That was the sale of your vehicle. That will be your invoice, your purchase agreement, your retail sales agreement, basically the sale of the vehicle. Now, three signatures would then create a bond, which is essentially your debt, the lien, the ILA, which is the installment loan agreement, the finance charge, the security agreement, the security interest. Technically, it will create the debt, the obligation. And this is how you have a finance charge. Now, looking under Regulation Z, I'm going to pull it up. We're going to be looking at 12 CFR Part 1026.4. Now, y'all see at the top, it says 12 CFR Part 1026, Regulation Z. And when we look under Table of Contents, we're under point 4 in that section where it talks about the finance charge. And we're looking at A, it reads, the finance charge is the cost of the consumer credit as a dollar amount. It includes any charge payable directly or indirectly by the consumer or imposed directly or indirectly by the creditor as an incident to or a condition of the extension of credit. It does not include any charge of a type payable in a comparable cash transaction. So all this means is the finance charge is the dollar amount of the consumer credit. Remember, this is a type of transaction, which is a consumer credit transaction. And this clearly says it should not include any charge of a type that's payable in a cash transaction. Down payment. So that is how you understand how your down payment was a violation under Regulation Z. Now, in understanding how that down payment now becomes tax fraud, I want you guys to ask yourself this question, and we're going to walk through it together. How did the dealership get paid? Sit on it. How do you think the dealership gets paid? So to answer that question, we're going to be looking under the Banks and Banking Act, which is what the part I want to look under is 12 USC Section 412. In case you were wondering, yes, the dealership is considered a reserve bank. Why are they considered a reserve bank? Because they are a public official that provides extensions of credit. So y'all know me, I have it pulled up and we're going to go over it. Now remember, the question at hand is how the dealership gets paid. Now this reads, any Federal Reserve Bank may make application to the local Federal Reserve agent for such amount of the Federal Reserve notes hereinbefore provided for as it may require. Such application shall be accompanied with a tender to the local Federal Reserve agent of collateral in amount equal to the sum of the Federal Reserve notes thus applied for and issued pursuant to such application. The collateral security thus offered shall be notes, drafts, bills of exchanges, or acceptances. And then they had the sections where they would discuss all of those examples of collateral. But to summarize what this just said, it says that the Federal Reserve Bank will make application to the Federal Reserve agent. Remember, y'all, it's 12 of them across the United States. They will make application to the Federal Reserve agent in the amount of the Federal Reserve notes that they're applying for. Is Federal Reserve notes just cash? No. Okay. If you know, you know. But they're basically going to the Federal Reserve agent requesting Federal Reserve notes in the amount of the security that we gave them, or that we signed and endorsed. The bill of exchange, the meaning promissory note, installment loan agreement, the application. Literally anything that had an itemization with an amount that you endorsed could be used as collateral. So the bigger picture is you go to a dealership, you get a car, they give you the car, they tell you, hey, you're going to pay this third party. And all they do is take maybe a bare minimum, a percentage of, or some form of a down payment, right? But remember, they're a Federal Reserve Bank, meaning they are getting paid off of the securities that they create and that you endorse. So aside from the securities, the bills of exchanges, the drafts, and the applications and things that you've endorsed with the Reserve Bank, they are still receiving cash from you that they said was a requirement to establish the consumer credit transaction. They said that the financial institution, aka the subcontractor, required it. But that is never the case. They always pocket that money. Now, if you find yourself wanting to litigate over this and you want to prove that the dealership pocketed the down payment money, if you're in a court or under a court jurisdiction, I personally would have that payment transfer subpoenaed by a judge, meaning I would tell the judge or request the judge to make them provide the records of that payment being transferred, of that down payment being transferred. And it's important that you know that even without proving that the dealership pocketed the money, assigners are in privity to their assignees, meaning that they are still one, okay? Especially if you're under a court or, getting them for organized crime. So the facts are still the facts. The transaction is still the transaction. Can you prove or show me where this money went? That's what you need to be requested as evidence that the defendant or the respondent submit. But that is how and why your down payment is considered to be illegal pursuant under Regulation Z, and why it's tax fraud, because nobody can account for that money, or at least prove that they ain't pocketed. Okay? Like and follow if y'all want a part 2. I believe we will do a part 2 so that I can walk you guys through exactly what you need to do if your down payment is something, if a down payment is something that you've made and you want it back. Now make sure you hit the link in the bio, book your consultation, sign up for mentorship. I am Aliyah Jatoy, your finance consultant and your business and consumer law coach. I love you guys. I will see you guys in the next video. One more thing. Remember, you have no rights if you don't exercise them. And the link in the bio, I'm so off today, but whatever. The link in the bio is jatoy.com. JETOI.com. 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 Mwah. Love you. Bye.